Welcome back, traders and investors. We have Nic Chahine on the line, MarketFi Maven, the product of creating income with option spreads. Nick, how you doing this morning?
Doing wonderful, thanks. How about you guys?
We're doing okay. First, we'll just get a general market outlook here. Right back at all-time highs here. Couple good earning reports this morning. Is there enough room on the upside here, considering we have all-time highs only 5 points away from the current level? Is there enough room here to still make some money on the long side?
Well, you know what? It's kind of a stalemate right now. We're back to a stalemate. I particularly, personally, I should say, would need a reason for us to run. I'm looking for a positive catalyst. What we've been getting are relief pops, and that's one of the things I'm looking at. For example, Yellen today talking, since the expectation now is that she is not in a hurry to cut rates, so she becomes a liability to the bullish thesis. But that's bullish by itself because what we'll get is a relief pop every time she talks and she doesn't say anything hawkish. But those are not deep pops that maintain themselves. So that's why I say we're going to meander versus we're going to run. And proof in the pudding was yesterday's pre-open futures were showing way stronger than what we ended up getting, especially on these small caps. So I need a catalyst to answer your question.
So what's your overall thoughts here then, Nick? Are you like playing this from the short side here, or are you just waiting on the sidelines for that catalyst? Like, how are you approaching it?
I'm being a weasel. I'm playing both sides of the fence. Every time I talk, I sound like a bear, and then I take bullish positions. So I'm kind of like, which makes me an iron condor guy by default. So what I'm doing is I'm trying to go along some things and short other things to spread the risk and hedge myself. And hopefully I pick good enough levels to where both cases survive. Last week I played Tesla on the short side. This week I started the week short Tesla and closed it in the morning, and then it ripped. It was just pure luck that I closed it. And so, but even if I had left it open, I picked a level where it would have survived yesterday's jump. What I did is I sold a credit call spread at the 235 level, and that would have survived. So my maximum risk was $2, about $2. And worst case scenario, should it shoot to the moon, I would have lost $2 per contract. So 10 contracts would have lost me 2,000. But instead, I picked a level safe enough that would have survived. So that's what I'm doing. I'm figuring out where the range is, and I'm just selling risk outside of that range.
And what made you cover that Tesla yesterday? I mean, I'm looking at it, and it actually made a new low in the morning at 215.45. I mean, that's above the prior low of the move at the down move at 214.27. Was it just? I mean, because sometimes I'm in trades like that too, and there's not a technical thing to look at. There's really nothing fundamental, but you just say to yourself, this is all I'm going to get out of this trade, and you do it. Was that just kind of a feel that got you out of that trade?
I made up an acronym this year, AGISIB, which is basically any green I see, I book. So any green in my portfolio that I get in a pop or relatively short period of time, I book it. It was tough to leave some money on the table yesterday by taking the trade at 50% of maximum when it dropped. But I said to myself, you know what? I'm just going to close it. This is Tesla. And sure enough, just minutes after that, whoosh, I looked back and was like, what the heck happened? And I started, scouring the internet for news, and everybody had theories. And I think it was something about China giving some incentives for electric cars or something. But regardless of what it was, I'm not overstaying my welcome in any trade. I shorted the SPX last week at 1185, and I closed it as soon as it went green. And, luckily I did. I also went long the SPX at 1940 via credit put spread. So I sold the 1940 and bought the 1935. Maximum exposure is $5. But it was hedged because I was short Tesla and short the SPX and short the RUT, but also long the RUT. So I'm just throwing iron condors in different spans of time. And just closing them as they turn green because we're getting seesaw. It's a stalemate, game of chicken.
Yeah. You got to take the profits while you got them in this market. I'd say the same thing because they go away quickly here.
Exactly.
Yeah, even look like the LORAI. If you were holding on to LO here for the merger, which has been rumored forever, and they've been saying it's going to happen, it's going to happen. It finally happens here now, and look at your reward for holding it. If you held it right into it, you're down 4 points here today on LO.
Yeah,
So.
does that leave room for arbitrage there? Isn't the price 68 or 69, or is there some other
Well, there's
thing
some
going on?
stock involved there too. So we talked about it early on the show here today. That the ratio is $50.50 cash and 0.2909 shares of RAI. So you got to do the math in there. With RAI trading down, that pulls it down a little bit here. But yeah, if it goes through, it does look like there is some room for some arbitrage profits. But obviously, this is the way they used to price things years ago. They put a little bit of risk premium in there because you got too big of tobacco companies. Is it going to be issues with this merger? Is it going to go through? The premium obviously wasn't nearly as much as everybody thought it was going to be. Stock went out at 67.22. It's only $1.50 premium because the stock had ran up so far already. So I think that's the concerns. Is it's just not a slam dunk to go through.
Yeah, so that's why this one was I stayed away from Lorillard for a while because of the menthol issue, because it was a huge liability. The U.S. government was going after menthols as far as legal things. So that's why I haven't traded in it long. But today I saw the headline. I was like, boy, there must be a hole here for arbitrage, or I'm not understanding the pricing. So thanks for the explanation there.
Okay.
Couple stocks from the chat I just want to talk about. We've got Nita there. She's been patient there, asking for symbols in DDD. What's your thoughts here on Triple D there, Nick?
Well, the 3D systems, the chart looks like it satisfied a giant head and shoulder way back that was peaked. What is that? I'm looking at it 1 year. January, I think, middle of January, early January. It had a nice run, bad candle. Beginning of July. So now it looks like it's trying to recover. Now, I don't cover it fundamentally, but technically it's trying to recover. It has some sort of a month or so, a decent upturn. Let me look at the weekly so it eliminate any of the noise, if you don't mind. Let's see.
Yeah, I'd like to make a quick comment here on
Yeah,
that.
go ahead.
Well, you made a 63.72 high. This was going back on July 2nd, and then you had 1, 2, 3, 4, 5 lower highs, and then you broke that string yesterday. Well, you had actually on Friday with a 57.92 high. 58.42 high yesterday. So I think if you're looking, with this thing you have to trade almost from a swing trade perspective because the volatility during the day trading. But if you were taking a look here at the mid 57s, you could be banking on that 54 low as a potential exit. And then I think once it can clear the $60 level, there's really no major resistance until you get to like 62 and a half, 63. So it looks like it's recovered. That one big spike down day, that was a crazy day when it got to 69.56. But I think this might be like a Harlan Pine chart here where, you kind of pull back. At least you have an out here if you're buying it at the mid 57s.
60. The option market for July. Did they report in July? If the option market in July is saying that 60, it could be a wall. There's a lot of open interest there as far as calls are concerned, and 55. So it looks like they want to play between 55 and 60 here this week. This is just for July on Triple D. So I'm. The range is 55 to 60 in my opinion here, at least for this week.
You've got SSYS actually getting initiated a accounting company here this morning with a price target of 150. So SSYS is actually trading up. Yeah, I know 150. They just put the price target on it. So $1.88 it's trading up here this morning. So I wonder if that'll push DDD up here a little bit. Like it is trading up about 30 cents in the pre-market, but it looks like there's going to be some strength in SSYS.
Yeah. Well, here's what I do in earnings time. I never take a full position into earnings, even if I have inside information, because you never know how people are going to react to it. And what you absolutely have to do for Nita, whoever's playing these stocks, you have to figure out when the competition of these companies are also reporting, because they trade in sympathy, especially these guys. So you have to lay out the grid for everybody that's reporting in this and then play accordingly, because then otherwise you're just coin flipping this bad boy. And 150, unless they have inside information there, how could they make this is crazy.
Pretty big price target.
Yeah, it is. Let me see on the options market on SSYS. Not too much going on, so I don't want to speak to it. Volume
Okay.
right there.
Well, Nick, just you said these stocks trade together, very similar patterns. Now you're looking at the daily of SSYS, who also had a real bad day on July. Well, it had a different bad day. That was on July 1st, where it had
Yeah,
the big
they
sell-off.
both did. They both did.
Yeah.
Well, they all had these ridiculous spike ups. That was upside. I've talked about it yesterday on the show. You talk about upside capitulation, where you have a move that's been trending up, and then boom, everybody short covers, and everybody gets in. And that's what you saw there on that day when all these things spiked up. I remember that day, July 1st, where XONE, I think, was trading up like $6-7 that day. It went absolutely parabolic. Yeah, XONE, if you bring up the chart, it opened at $40 that day. It went to $48.65. Like, that's just your definition of upside capitulation. Every short washed out, every long that wanted in, little long that wanted in, got in right at the top, and then obviously pulls back from there. So that's the capitulatory event where you see a reversal happen.
Okay, let's move on to soda here. Ace is really trying to pick
I know. I
apart.
saw that there.
What do you think? What advice do you have? I mean, he's bottom picking, so I've seen him do this before in a couple other stocks.
He's a good bottom picker. You got to give Ace credit on that. He does pick these bottoms pretty well when he's bottom picking.
Well, I have to go like 5 years back in order to find any level that we can ping against from here. At this point, it's just a complete lotto ticket as to what's going to happen with it. I really don't know the news and the fundamentals in it. Maybe I don't know, some outside interference that gets some help that it gets from somebody else, or news on something else. Fundamentally, I don't know enough, but the chart is there's no reason for me to get involved here except for a lotto ticket.
Well,
I can give you some reason there. I'm looking in 2011 and 2012, and if you are bottom picking, I'm not a big bottom picker, there is some support down here. In early 2011, we got down to $27. In October 2011, $27.60, and then $29.41, $28. So if you're looking at this from the $70 sell-off from the highs there down to $28.950 here now, there is some support down here in the 27.28 area.
Well, that's what I said. You have to go back years in order to find something. So that's and that would be just to complete your hoping. I mean, where's the theory? Where's the thesis? Where's the baseline? Why am I buying it now? Other than, it's likely to bounce. Odds are, and that's not.
Just commenting, I mean, just a good risk reward basis, and this is what we like to talk about as far as setups. I mean, if you're getting in at this level and it takes out 29, what if he takes a 50 or 60 cent loss here, and then tries it again? It's just a pattern of making small, and it's kind of like with your lotto trades. I mean, he's not looking for this thing to go back to $70. He's just looking for some kind of short covering rally or something, the risk to justify the risk reward ratio he takes out. It's not like he's trying to buy it at 29.50, goes down to 28.50, he's going to buy more, 27.50. A lot of times you can take your small losses, and then when you finally get the pop. But technically, I see what he's saying. Let's see, Cold Slug MLR here. Do you have any comments on that before we end the segment?
I don't know the stock at all. It's got a nice trend. So whatever is going on, it's got some nice chug up. So a nice up channel. If you can play that range, good for you. But I have no idea what that is. So
you know what I don't like on this chart is the 2050 though, because we struggled there in May, June, multiple times. Finally took it out there in the end of July and had the double top up there at 2142 and 2144. And now we've taken it out again. And when you come back up to this level the first time, I think you could struggle here at 2050 again, and that's exactly what happened yesterday. We got up to 2050. So in this area, I don't like the 2050.
I don't either, and I think to trend it and be honest about it, you have to use the weekly. So instead of choosing the daily chart, use the weekly to eliminate those noise. The noise moves like that, and you'll have a better channel and you'll set up a better trade, I think.
Yeah, what final comment on this Miller Industries? I'm just noticing like that double top that it made within 2 cents at 21.42 and 21.44. And then you got another double top at the 2060 level. So this kind of gives you areas, at least a double top or a double bottom to key off here. But I guess we're all concurrence here. It needs to clear 2060 to get a chance to go back over $21.
Yeah, yeah, it's done it before though, so I'm not too concerned about it unless there's something going on. These are two big candles, and they deserve respect, as I usually say. So, and about this time last year, it had two similar candles, and it wasn't too good for the next 2 or 3 weeks after that. So, be cautious with it, but definitely put stops in your mind and act on it.
Could you just do real quick Herbalife for us? I know it's a
Well,
Momo. I
yeah.
know it's not. Boy, this thing's been bunching up here for the last wow, more longer than that. Look at this
Yeah.
consolidation. Is there anything probably playing the wings on this one, or are you gonna wait for a
It's
breakout or a breakdown?
that's a great lotto ticket. I haven't looked at it in a while, but look how wound tight it is.
Mm-hmm.
It's just ready to burst. So which
One way or another.
Exactly. Which way? Flip a coin, take a position, and consider it your lotto ticket for the month, and you can probably make money on that one if you guess the right direction. And let's see if they tell us anything in the option. When do they report? Do you have that ready?
I do not have that in front
Okay.
of me.
So let's see. I don't see enough volume in the positions that are. Oh, wait a minute. August has a lot of volume, but it's a lot of calls at 110, and it looks like not a lot of puts, but 40. So that doesn't tell us anything. Anywhere between 40 and 110.
Those are the Ackman 40 puts and
Yeah.
the Icon 110 calls. So
Yeah.
okay, Nick, thanks a lot for coming on, giving us your outlook on the markets. Nic Chahine, MarketFi Maven, creating income with option spreads. I encourage you all to check that out on the MarketFi homepage. Well, Nick, it's great as always to have you on, and have a good trading day. We'll check in with you next week.
Thanks, guys. Looking forward to it.